Hey guys, welcome back. In today's video, we are talking about why something big is coming for AMC, the inevitable short squeeze, our investment 10xing, and many more in this video. First, we're taking a look at this. Cinemark market cap 2.78 billion. AMC market cap 766 million. Now, we've always known that there is a discrepancy between the market cap of Cinemark and AMC. Now, we've always also said is that AMC's market cap should be similar, if not bigger than Cinemark's. Now, one of the reasons for why this is because we're faced with things like 2.65 million shares being borrowed against a $150 stock in the pre-market. So when you take a look at this, when they were preparing for AMC today, what we've seen is recently when AMC had this even slightest move up, we saw how shorts were panicking. We saw how shorts were facing illiquidity problems, especially when you pair that up with everything that's going on in the market right now. We understood that we obviously affected them. And then we saw how volume has increased, and so has the dark pool usage, and of course the shares being borrowed. If we take a look at the dark pools, you can see they're trying to say that retail isn't buying AMC. They're trying to say that no one is buying AMC. But meanwhile, we have 42 million shares traded off exchange. So if you take a look at the dark pool usage, so this is for the 26th, what we saw was 76% dark pool for AMC with 42.58 million shares being in the off exchange, meaning that 42 million of these didn't have any effect on AMC whatsoever. Now, with data we've seen in the past as well, we know that the ratio of buys to sells is extremely crazy. We know that what we are looking at is that most of the orders that are in this dark pool that are going through AMC every single day are actually buy orders. However, we're being robbed of that. The majority of buy orders, where typically should have an effect on price, is being routed in off exchange, is being internalized, and therefore not having an effect on price. If we even take a look at today's, what we're looking at is 75% of 15.9 million. This is what we talked about with how the dark pool usage is extremely high. Once again, people will say that stocks like Apple, stocks like Amazon, even stocks like Cinemark will also see off exchange. And to that, I obviously agree, but they are not seeing the same percentage as AMC is. They are not seeing the same percentage as the 30-day average for their stocks like AMC is. And so we have to realize the majority of our trades are being internalized, routed into the dark pool, and therefore not actually having an effect on the price. We've shown this data in the past as well, where we saw the inflow of capital was over 200 million, whilst the outflow was only 30 million, meaning more than $200 million worth of shares was bought and only 30 million shares of shares were 30 million worth of shares were sold, and yet we still saw the price drop, where normally that would dictate the price to actually go up. So we know what's going on. So when we talk about why AMC is not the same market cap as Cinemark, that's the reason why. But it doesn't stop there. Because I do think that right now, especially with everything that's going on right now, the fact we're seeing 36 million, 15 million shares traded in less than half of a trading day. Why? Who's buying? Is that we think that plenty of people know that something major is about to come down the pike for AMC. Now, the reason why I say this is because we've seen how institutions have ramped up their accumulation on AMC. We talked about this with certain firms buying big bulks of AMC, UBS buying 23 million shares of AMC. We're talking about institutional ownership at all-time high. We're talking about 36 million shares traded in less than half of a trading day. We're seeing this intense volume, intense accumulation coming in for AMC. And why is that? Well, we've already said, right now, when you take a look at the silver market, when you take a look at just the gold market, when you take a look at the AI inflation, the Japanese yen market, when we take a look at the crypto market, things that have worked for these shorts, things that have worked for these institutions and banks are not working anymore. Banks have been shorting metal and silver and gold. Institutions have been shorting silver and gold. And now we're seeing how that's blowing their short positions up. Banks and shorts have been relying on the AI inflation, but we're seeing how the Japanese yen market failing could easily bring that AI inflation down. And then what we're talking about is the crypto market, where they previously used as collaterals, to also be dropping as well. And so we are looking at a lot of things to be going bad for the short sellers. And it's also why you would start seeing the articles on AMC to increase. But of course, these are negative articles. So if you take a look, if you search for AMC, now perhaps because you guys watch AMC videos, you will find different news. But what a lot of people are seeing is how all of these media articles are negative for AMC. And you can even see this precise article talking about how AMC Theater sold its stake in a silver mining company before silver went on a record run. Now, this title, what they fail to say is, firstly, they then specify that sold most of his stake. But what they fail to say is that despite AMC selling their stake, AMC is still making insane profits on that investment. I have always been open about this. I have always been transparent about this, in the sense that I do agree. Had AMC not sold the original stake that they had they waited, had they held on to it, yes, they would be in a lot more profit. But we have to realize is that not only did AMC get out of their original investment, but they still have stakes, they still have warrants that can exercise, and they are still in profits in the tens of millions. And so, I agree in the sense that yes, they could have made more profit, but the fact that they're saying that they made zero, or that they're trying to insinuate that they've made zero, this is something that we have to realize what's going on. And so we know that with this investment, AMC has done well. Not to mention, when AMC was first making this investment, they were attacking AMC on why they made an investment. And now they're attacking AMC for selling this investment. And we can just see why these articles are there. A big reason for why this is happening is because some people are starting to realize that retail investors have become a force Wall Street can't ignore. One of the big reasons for why I said that I believe something big is coming for AMC is precisely because of this. The pressure that we have applied to the hedge funds in the last few years has been insane. It's why we've seen 42 million volume being routed into the dark pool. And precisely because of that, we can see how much of the flow, or we can get an estimate. You can see here, at first I roughly figured that naked shorts have enabled AMC apes to buy roughly 29 times the flow. Just in the last 3 weeks or so, I've upped my estimates to over 50 flow at these sub $2 prices. Everyone is buying more AMC, we're just doing it off exchange in the dark. Now, this is what we've said. Firstly, the force with apes has been insane. The kind of momentum that we have kicked the hedge funds with is insane. This is something that we have always known. Very united community, and we always keep each other up to date. And most importantly, we can see from the OBV is that everyone is constantly buying and then not selling and holding onto their shares. And now with this, along with the dark pool data, we obviously know that tens, 50, potentially even hundreds of floats have been sold off AMC. And so this is why we've said we've become a force that Wall Street can't ignore anymore, because they know that not only have we made them, and not only have we forced them to create 50 times the float of AMC, we are also not selling until they are forced to cover. And that's what's getting these short sellers scared. Another data that shows this is the fact that the new high in split adjusted SI is now comparable to non-adjusted AMC SI pre-conversion and split. So this is what we've said, and I'm not just saying that as we saw the price go up, and I said that we're showing pressure to the shorts. We are seeing how shorts were facing problems. The reason why I said that is because immediately as we saw the price climb, we saw the short interest go up as well. And so ask yourself this. If there are no short sellers in AMC, if there is no one being affected by even a 10% move, by even a small increment of move for AMC, why do we see the short interest double just from AMC going up 10, 15%? And the answer to that is because we know that the moment we go up 10%, the moment we go up 15%, these short sellers are very likely losing in the hundreds of millions, if not billions of dollars. And it will come to a point where it will go past their position as well. It will go up even higher, where they start losing tens of billions, and that's when they're forced to cover. And so that's why we're seeing why the short interest is going up drastically. Now, so small things to talk about in terms and regards to AMC is firstly, Adam Aaron talked about in terms of the popcorn selling, and he said that what we right now see on average, AMC and Odeon sell about a dozen tons of popcorn per day in our theaters. So we know from this that firstly, this is providing good data in that we know that this is going to create revenue. We know that this has been doing well for AMC. Now, we can only continue to see this grow. The very fact we are already selling this much should already be understandable for why we're doing so well. Another thing to mention on top of that is the 6.9 million AMC shares paid to shareholders in 2023 settlement is to be covered by insurance. So this is something good that in terms of that we're being compensated. And so this is just, like I said, a small thing that I want to mention for why we're seeing other good news for AMC as well. Furthermore, a lot of talks about MOAS today. As an investor since October 2020, I know that the 230% short interest did not disappear in a measly gamma squeeze. Shorts never closed, they just kicked the can. GameStop will rival Tesla, Nvidia, and Bitcoin, and what we're looking at right now. Now, firstly, I completely agree with this. The same applies for AMC as well. We have to realize what we saw back then was only a small, slight shown of what should have happened, because we know that there was no way they could have got rid of the FTDs that fast. There's no way they could have cleared the shorts that fast. And so we knew that it was because of them manipulating the buy button. That's how they were able to delay it. That's how they're able to continuously kick the can down the road. However, it will come to a point where the short squeeze will be inevitable. We know that, we see that, we know we have the data, we're seeing the market crashing down right now, and this is what we are looking at. And what potentially is that we all saw what silver did in the last few months. Now it's GameStop turn. And just like how we've seen how silver can easily gain trillions of dollars in terms of market cap, you have to realize that GameStop, AMC, they can do the same. We know that there is this money that is out there that is in circulation. We know that if it comes to it, they will have to pay us, and they do have the money to pay us. And so as we see silver go up, as we see gold up, we can also see the same thing happening to AMC and GME as well. Press like if you agree, like X Market News has said. Now, another thing is GME short volume just went nuclear. 12.1 million shorts in a single day, plus 479%. So this is what we've said. The moment we start seeing any bullish momentum from AMC, from GME, you're starting to see how the shorts are panicking. And why would the shorts try and short something when they see it going up? The reason for that is because they can't afford to let it go up. They can't afford to see GME take that momentum. That's why we're seeing the dark pool. That's why we're seeing the short. The same applies for AMC as well. The same applies for GME. And this is just showing exactly what we have said. And if you want to look at talking about institutions obviously manipulating the market, you can see it here. Major banks already fined by FINRA in 2026. Wells Fargo failed to deliver naked shorts. BNP failed to report OTC option position. These guys do it so many times. Even ABM, insufficient liquid resources to meet commitments. You know, they are doing all of these things. These aren't things that we are making up. These are things that are literally being fined for. These are things that regulations have called out. The only problem is, firstly, the fine isn't big enough. Secondly, they can't stop them from doing it. These big institutions continue to do it, and that's how they're ripping off the retail. That's why and how they're suppressing the squeeze of AMC, of GME. Now let's talk about our investment 10xing. Firstly, a big thing, and it's going back to what we said earlier about the calling out HYMC, is that we have to realize HYMC is still on a run. So AMC is still going to continuously making money from this. Apes will still continuously make money from this. Now, the reason why we're also seeing pressure on HYMC, not to mention that HYMC doing, as of recording right now, or as the market has ended, has done exceptionally well. Now, firstly, we have to realize is that there were 11,000 calls that will be in the money at 58.50. Now, as of this recording, HYMC closed at 54.85. We're up 10% for the day, and that's why they were afraid. That's why we're seeing the pressure kick in. The reason for this is because they know that HYMC will continuously go up. The reason for this is because firstly, what we're looking at is how silver can surge to $200 per ounce, and they called it inevitable. What furthermore is that we have potential to see $600 or $921 in 2 to 3 years. So we're only going to be looking at silver going up. And with silver going up, who's going to be the biggest benefactor? It will obviously be companies like HYMC, and that's what they're afraid. And so they're trying to delay it from the options going in the money. They know they can't stop the momentum now. They can only stop the short-term things from happening, which is obviously in the money options, which would then cause the gamma squeeze against these short sellers. Now, if we want to look at some other data which shows short term, firstly, we talked about silver spot price in China, which closed today at $128.48 and is trading at a $20 discount. Now, we've talked about how this is a leading indicator. The Chinese market has shown why they're the leading indicator. I covered this in my silver video. I will make another one very soon. And so we know that the silver price is only going to continuously go up. And so that is something that we have to take into consideration as well, is that short term, we're looking at momentum, long term, we're looking at momentum. Not only that, so we just talked about how silver is the leading indicator. We talked about the discount. We can see that it's still going up in China as we see it go to $131. Furthermore, this is what we said earlier in the video. We talked about how banks were caught in the wrong side of these trades. We talked about how silver and gold market going up is bad for institutions and banks because they were on the short side. You can see that potentially the Goldman Sachs head of precious metals who is leaving the bank potentially is being fired because he was on the wrong side of the trade. And so this is how we know that banks and institutions are panicking and are failing on their side. Now, furthermore, we're seeing the silver ETF trading 393 million shares today, the largest volume day in history. Now, to put it into consideration, we have to see that it's $32 billion. That's 15 times his average, and by far the most volume of any security on the planet. For context, SPY is 24 billion, Nvidia and Tesla 16 billion. And so this is something that is extremely, extremely major. And it only just says the scale of things. So if we're talking about a potential collapse of a bank, or all of these guys being liquidated, no money for them to borrow to then short AMC and GME, this is where we are looking at. And we're even seeing how banks now have fallen. And the fact that they are raising the silver target price to $150 per ounce from 100, they keep on continuously going up despite the fact that they are getting crushed by these positions. Now, aside from that, we're looking at the US dollar reaching the lowest level in 4 years, which is something extremely worrying because as we see the dollars tanking, metals skyrocketing, bonds selling off, we're looking at the worst scenario for the Fed. What this means is that we could be looking at the commodities market going up, but the entirety of the stock market going down. Now that could potentially see the collaterals fail for the short sellers, meaning AMC, despite the market doing bad, AMC will triumph out of it. Now, as always, this is ever financial advice, so do take what I say, make sure you do your own due diligence and research, and I'll catch you guys next time.